Hi guys, welcome back to the channel. If you're new here, please consider subscribing. If you were just passing by, so that you get notified of future videos when we post. And like this video, that's the only thing that I'll ever ask you to do. You not pay for anything, you don't pay for information, you don't pay for robots, you don't pay for indicators, you don't pay for anything. If you're looking for indicators, robots, and systems and things like that, consider going to the two blogs in the links are in the description box below. Go there and see if you cannot find what you're looking for. Then come back and leave a comment, and I'll try my best to look for what you'll be requesting. So if you have not watched the previous videos, today we are talking about managing the trades. I showed you in the first videos that you do not need to struggle with forex trading. Most of the time the market is doing the work for you. Most of the time the market is doing the work for you. So there's no need to struggle. There's no need to struggle. Most of the time the market is doing things for you, because we said the market is always repeating what it did previously. What you want to do is just to be patient enough to wait for the market to show you what it's about to do. To be patient enough to wait for the market to come to the areas where it does what it does. That's what is required of you. Then in the previous videos I also showed you how I look for entries. Now we are going to look into how to manage those entries. Once you take those trades, how do you manage the trades? So for those who were not with us, just show you how to manage trades on the weekly. Let's start on the weekly. I'm trying to make this video as quickly as possible. Let's look for our zones of interest. All these are zones of interest, but some of them are minor. You decide which ones you want to use and which ones you might not want to use. But generally I also try not to have this so much lines on my charts. Then we go back to the candlesticks and we go to the daily. Okay, here is an example. Let's say I spotted my entry there from this level, and spotted my entry on that level, and I bought. That's my buy. Where is my target? My target is obviously this level. You cannot see my line there. Okay, my target is obviously this level. If things go well, I'm targeting this level. That's basically my TP. That's my target. This is how many pips from here to there? That's 334 pips. 334 pips. That's my target. Where do I place my stop loss? Where would I place my stop loss? Usually below the last high. High. The last high there. And sometimes I do not place stop losses, like on the chart. Let me change the color of this. Let me change the color of this so that it's visible. And the color of this, that's my buy. And that's my take profit. Let's make it gold. And okay. So I was saying sometimes I even don't even place stop losses. Sometimes I've watched price when you place a stop loss, it comes back to the stop loss and then turns back. So I usually have a mental stop loss. I know the area where I'll be able to just close the trade if things don't go my way, and I'm disciplined enough to do that. So I know even if I didn't place a stop loss, if price comes into this area and it looks like it has got momentum, because this is higher time frames, like this is momentum, that's momentum, these large candles, it's momentum, and I see that it's coming to my level with this kind of candle like momentum, this is an indication that it's exhausting, so I don't worry about this. But if it comes aggressively like this, then I know I need to worry. So yeah, if it comes to my area of stop loss with this kind of candle, this kind of momentum, then I simply close the trade and I wait to see what is it going to do. It's going to come. Now I need to change this to, let's see this color. Okay, it's going to do that and go and do this, go down, or is it simply hunting for stops, which is what they do before they go back up? Say I close my trade because of the stop loss hunt, then definitely the moment it shows that is going back up, I re-enter. If it closes my stop loss this way, the moment it shows that it's coming for a retest and the retest has been confirmed and we're going down, I enter. This becomes my entry. I enter a sell. You get the point. So let's continue with how I manage these trades. Say I enter the buy there, and obviously I'm targeting the next level. Price starts moving. I don't do anything. I don't touch my stop loss. Price starts moving and it comes back down. I don't touch my stop loss. Then it starts moving again, moving again, moving again. Then I move my stop loss to that first test. Then it starts moving. Price now starts moving. This is where I then get involved. I start moving my stop loss closer. because my target is this. I don't want to be this to happen when I'm close to my target. I don't want this where it comes here and then it does something. If it does something, a pullback or something before any reason, I want to have banked my at least 90% of my trade. So price comes, sorry about this, price comes around this area. Say I had a standard lot. As an example, I had a standard lot and price is now here, it's nearing my TP. I take out 0.90. I take out 0.90 and I move my stop loss closer. As price gets closer, now I'm not sure if it's going to break out or if it's going to bounce back. I again start moving my stop loss closer. If it drops and takes out my stop loss, it's all fine. I've banked my trade. I've banked my trade. If it doesn't do that, like in this instance, and it continued, now I've got the wrong button. Okay, and it okay. And it continues. How come I can move this? And it continues like it did this way. Then my stop loss is there, close to the take profit, the initial take profit that I had. And then I watch with interest what happens here. If it happens that it's showing me signs that we are going to this next level, then that's reason for me to enter another trade. So I have this trade. How do you duplicate that? So I have this trade and I enter a second trade. I enter a second trade basically with same approach as before. My TP is there and now I'm waiting for price to continue going up and my TPs will come to the first bounce and I'm watching these things. Now they want to move. I watch price moving and I'm moving my trailing stop, and as price again gets close to that second take profit, I am moving my stop loss, and that second trade I'm taking off 90% of it out of the market. So I'm left with the initial 10% and now I'm left with the second 10%, and I'm watching it to see what's happening here. Now because we are getting close to the take profit, I'm moving my stop loss closer now, so that when price reverses, if it doesn't break out, if it reverses, at least I've got the remainder of all of that. So as price nears that level, generally my stop loss becomes tight. That's how I do this. Let's find another chart to demonstrate this. I mentioned this in a previous video that I don't know why if I change charts, the previous stuff that I was using in the previous chart seems to remain there. Delete this. Delete that. Delete that. Delete. Delete. Okay, it's an advantage that I don't have to recreate these things. Why does it work more? Okay, so now we are on Euro USD and it's a daily chart, and let's look for our levels, zones. I previously said these zones are not precise. They are areas of interest, and they are zones. They are zones, they are areas of interest. Then we go back to the 4-hour chart. For our chart, let's look for, where's my stuff? Where did my stuff go? There. So need to move the stuff closer. Okay, so last time with the previous pair we did a demonstration of a buy. So this time I think let's do a demonstration of a sell. Let's do a demonstration of a sell. I'm not going to do this because this was the US elections. So yeah, I wasn't trading the US elections. I tried to stay away from major news events like that. So yeah, let's find a perfect sell here. Okay, so there is my zone of interest. The previous chart, I think I demonstrated on the weekly and daily. I probably demonstrated on the weekly and daily. So this will show you how to manage the trades on the 4-hourly, and the daily. The support and resistance is daily, and we are trading the 4-hour. The previous chart, and I'm convinced now that we were trading on the daily, and it was using weekly support and resistance. But anyway, it helps us to kill two birds with one stone in this video. So, but generally it's same rules. I spot that something is about to happen here, and price is struggling to go up, which means it has to go down. I enter. I usually try not to find patterns or that other stuff, because these are higher time frames. So that's my sell there, and my stop loss will be a distance above here. You have to be comfortable with money that you might lose. So my stop loss will be somewhere around about there. Yeah, somewhere around about there, just above the zone. And I did mention that sometimes I don't place a physical stop loss, it's just mental. If I see price coming out of this zone with force, then I know I need to close this trade, and I'll then look for a buy opportunity. And with my sell there, this will be my take profit. And I said, after entering here, it's a pity that this happened in 2 seconds, not 2 seconds though, because this 4 hour, so it happens in 8 hours. You sell there, then price starts moving. It starts moving. I do not touch the stop loss. It starts moving. When price is generally around midpoint, that's when I move my stop loss to somewhere thereabouts. There are chances that it might go back up. Yes, it's a possibility that from here this candle will just go back up. It's fine. That's the point of the stop loss, so that I don't get out of the trade with a negative. Here, if it goes back up, probably I'm going to go out of the trades with a few cents or a few dollars. It's all good, it's all fine. That's what the market gave me, so I take it. But in this instance, then price dropped down again. Then this is when I start paying attention to my stop loss. I start moving it closer. Price, the moment it starts going closer to my TP, I said if I was in a standard lot, I take out 0.90. 90% of that trade, I take it out. Then the remaining 10%, I start moving my stop loss tighter. Start making it tighter, because I don't know what's going to happen here. Maybe the next candle will just shoot up. I don't know. But 90% of my trade I've already banked. Now I'm just playing with the remaining 10%. Then price comes here. I don't necessarily close the trade. I just move my stop loss closer. It does happen that sometimes price then jumps back up and you get taken out, or it breaks down, it breaks through. Price now is broken through, evidenced by this candle. I'll then, doesn't want to move, enter a second trade, and the new target is there. So I have a new trade there, and that other 10%. And now that we've broken down, that we've broken through, I start managing my stop loss. A new stop loss needs to be, I don't know, to select that one. How come I keep selecting that one? my new stop loss needs to respect this zone. This zone, this I week is where my stop loss is for the new trade. And if I had not been taken out of the market, my other 10% is in there as well. Then again, I wait for price to start moving down to that level. It might happen that this candle then just shoots up and takes me out. It's fine. That's market. You should be comfortable with your losses as you are comfortable with your wins. It might happen. You don't know. Uh, so, but if it goes our way, then we watch again price coming down to our TP, and again on the second trade I take out 90% of that trade and I leave 10%. So now these are two 10%. So this is just 20% of my two trades on here. And again, my stop loss is somewhere there, but as price continues moving closer, my stop loss also becomes tighter. That's how I generally manage the trade. So I definitely hope that the first demonstration was on the daily using the weekly support and resistance. This was the 4 hour, trading on the 4 hour using the daily support and resistance. So you can generally get a point of how to manage these trades, where to get out, where to get in, how to get in, and how to get out. Like the video, subscribe if you're not yet subscribed, leave a comment if you have questions, if there are things that you did not understand that you need me to expand on. Until next time, bye.